Well, this is a common story among the financial stocks. 4 years ago, back in 2006, and before the credit crunch, Legg Mason shares trading at more than $130 each. Today, it's below 29 and still falling. In fact, today, dropping the most in 8 months. The big culprit behind the sell-off, clients withdrawing billions of dollars from Legg's fixed income funds. That's what the company reported today as we got earnings. Mark Fetting, he's chairman and CEO of Legg Mason, and he's joining us now from our Washington newsroom. Mark, thank you very much for joining us. We appreciate it. So obviously there's been a lot of talk about these bond fund outflows. That hasn't necessarily been exclusive to Legg Mason, but talk to me a little bit about what you think is behind that move.
Yeah, thank you for allowing me to be here, Julie. Today we reported our results, and I think it's important to emphasize, which was noted in the analysts following us, that we've made real progress on a number of points, but more progress is needed on a few. We have cleaned up our balance sheet. We announced paying off our debt, $550 million term loan, so that we now have $1 billion of excess cash and only a 20% debt-to-capital ratio. Our performance has improved across the board in 2009, very strong performance in fixed income and equities for our clients. And our earnings continue to trend favorably. Our margin was up and our EBITDA was up. On the other hand, the key issue that remains, and an issue I'm very focused on and our team is focused on, are the outflows. And that is the key issue. And I can give you a little color underneath that, I think, that helps explain it and what we're doing about it.
Please do.
So if you take a look at our outflows year over year, they're down, but they're still in outflows as opposed to a time in the industry where you're seeing some inflows from other peers. Specifically, it's the fixed income area. And there, what you find is, number one, some seasonality going on in our December quarter, which explains some of it. Number two, the enhanced cash product that industry-wide has been essentially going away post-crisis. We had, I think, something like $7 billion of the $12 billion in outflows in this category was just enhanced cash. That's gone from $20 billion down to $3 billion now, so it's basically a non-issue, virtually a non-issue going forward. On the other hand, what we have in the fixed income area is actually beyond that, those two one-offs, if you will, is some real stories of success in global credit, in foreign currency, in muni, and also some continued outflows in some other areas. But we're not where we want to be, not where our shareholders would like to see us be, and clearly that was part of the reason for the fall-off today. I do think some of the other fall-off, if I can, was we had run up in the prior 2 days, and we're seeing some evidence of short covering being some of this. So we're running a bit higher than the space, but
Mark?
as you know, the space today is off.
Mark, of course, definitely we're seeing all the financials down. Mark, in terms of sort of general sentiment around bonds right now and bond funds, there's the general sentiment and there's what you specifically can do to try and stabilize things. What is Legg doing to try and get money back into those funds?
Well, mission number 1, 2, and 3 is to improve performance. And last year, virtually all of Western Asset Management's performance was top quartile against its peer group. It did what its clients wanted it to do, was to continue to take prudent bets in the credit area in those categories, but also deliver in other mandates. We want to continue our focus on that. We've attracted a strong team with some new members on the investment side, strong team with some new risk managers, and also work more effectively with our distribution teams at Legg Mason, particularly in the retail fund space.
Mark, I got to ask you about equity, too. Bill Miller, who's a very well-known investor, you talked a little bit on the conference call that Bill Miller's fund is now attracting money. Could you give us a little bit more detail on that?
Right. Well, that, too, is a great performance story in 2009. The Opportunity Trust and the Value Trust that are managed by Bill and some other colleagues are both up very strong, as is Special, run by Sam Peters. In Opportunity Trust, which was, I think, the number 3 performing fund in its category for the year, we actually saw inflows in the international markets, approaching inflows in the retail U.S. markets, and very encouraging, some upbeat interest in the institutional RFP, and we're in some finals there. So it's encouraging, but we still haven't crossed the line, so we still got work to do there as well.
Mark, your largest shareholder is Nelson Peltz. Have you talked to him at all about the outflow issue and talked about ways to attack it?
Absolutely. Nelson joined our board He's participated in one meeting. We're preparing for another one next week. Like all our board members, I've been keeping them posted on our game plan. They appreciate the progress we've made around balance sheet, around earnings, around performance, but they, like I and our management team, are focused on outflows. And I'd say the board and the management team are totally on the same page in making that improvement in outflows, which will restore growth, but also in margin, improving that profit margin, which directionally we've been doing, but we can probably pick up the pace there.
All right, Mark Fetting, CEO of Legg Mason, thanks a lot for joining us. Really appreciate it.
Thank you for allowing me, Julie.